Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, March 17th, 2011. Well, folks, what we're seeing today is an up day on Wall Street. The Dow Jones Industrial Average is up 146 points, Nasdaq is up 35, and the S&P 500 is up 18. Basically, 1.25 to 1.5% gains across the board. Now, the key today is to talk about how I called the bounce yesterday. Yesterday, we saw the markets collapsing. It was a huge down day. There was panic in the air. Japan was erupting in more issues because of this nuclear meltdown-ish type stuff. The Middle East was starting to bubble up again. Europe is always an issue. So how did I know that you were going to see a bounce in this market today? I mean, how come I told my members to buy large cap plays like Hewlett Packard, like Apple Computer, and some of these other plays out there? I mean, what was the driving force behind giving us that idea? And I'm going to explain it right now. First of all, you have to look back to yesterday. The first key to yesterday's action was the fact that the volume was so big. Now, yesterday, the volume was about 450 million on the SPY, folks. 450 million. If you go back 3 to 4 weeks ago, the average volume on a small up day in the markets was less than 100 million or around 100 million. So you did 4 times more volume than you did on a normal day 3 to 4 weeks ago. Even on the big down days of 200, 100 points in the last 2 to 3 weeks, you still only saw 250 million in average volume. So this was literally double even a down day of the equal proportions that we saw in the last 2 to 3 weeks. That's huge. What you have to recognize through that volume, and take a look here on the daily chart. Look at the volume yesterday. This is a capitulation signal. And essentially what capitulation is where the amateurs, the retail investors, and a lot of smaller hedge funds, they end up panicking because the market's dumping so sharply. And we saw this. It was like a mini intraday crash right here where the markets just collapsed down drastically, and that actually turned out to be the dead bottom. And notice the volume surge right here, heavy volume in that period, and then the big reversal. That's what's called capitulation, folks, and that's a bottoming signal. When you have that much volume and the market, again, has other signals to it, you have to look for upside afterwards. And again, the upside signal also came from this aspect, which if I zoom in, please direct your attention to this area of support. These two orange trend lines going sideways match up with the gap fill, get this, from December 31st, 2010, meaning that yesterday on the downward move, we wiped out 100% of the gains from 2011. Not only that, but we filled a massive gap right here on the daily chart from December 31st. And again, that's another signal that there's huge support there. So what you're seeing here is I'm essentially putting together the pieces of the puzzle. Putting together the pieces of the puzzle allow me to make educated guesses, high probability trades. In other words, going along the market yesterday around the lows. And sure enough, that's exactly what I did, making the call to go long on Google, Apple, HPQ, Hewlett Packard, other plays as well out there. And again, anything was hitting a major support, and along with the market, you had to figure it was going to bounce. And sure enough, Apple's up $8 today, Google's up about $8 today, Hewlett Packard's having a big day. I already closed out that position in Hewlett Packard myself for about $1 gain, and it's up even more today from that point where I took my profits. So that's just to give you guys an idea about what we do here in the Research Center. And remember, you can always take the free trial of the Research Center by going to In the Money Stocks, and there's banners all over the homepage and all over the website, on the blog and so forth, that will show you how to click for the free trial for the Research Center. You can also take the free trial of the Intraday Stock Chat, which is where we give play-by-play. We give out intraday calls. We give out swing trades. You name it. It's live. You can ask questions. You'll see our live charts as well. And you can take a 1-week free trial of the chat as well as the Research Center. So again, I encourage you to go do that, folks, as it's one step closer to being a master trader like we've become. And I love it because yesterday and the last week or so, our traders were making a ton of money, and our swing traders in the Research Center were making a ton of money on the downside of the market. So we were short the market as we had a pivot signal to the downside, cycle dates, confirmation signals to the downside. And then ultimately what we have here, folks, is all of a sudden a switch signal to the upside, and then we go long yesterday, and then we're making money on the long side. So you're neither a bull nor a bear. You're a swing trader or a day trader. You're a short-term trader with, again, if you want to hold multiple days, that's fine. That's called a swing trader. Or you can be a day trader where you're intraday trading. Swing traders are more the people that have 9-to-5 jobs that can't watch the market all day long. They swing trade. You would have gone long yesterday. You'd be selling today. Day traders are more the intraday period, buying and selling within a few minutes or a few seconds and whatever it may come. All right. So again, that's how we knew that the market had a high probability of a bounce. I made the gutsy call yesterday to go long. It paid off huge in dividends today with big profits. And again, I hope most of you guys that aren't members do come and join us at In the Money Stocks, whether you're a swing trader or a day trader, and just start, grasping the ability to make the type of money that you should be making. Grasp it. There's no reason why you shouldn't be making tens of thousands of dollars every week or couple weeks, if not even more, depending on the liquidity and the money that you're investing. All right, let's go back to the intraday chart here, folks. Again, a gap up today. You had CPI numbers this morning, consumer price index. We're looking at the Spiders S&P 500, which is again the symbol SPY. This mirrors the S&P 500. You can see a little bit of a gap up, a pullback to the 50 moving average, which is short-term support. The market then moved higher almost to yesterday's pivot high, then kind of consolidated, couldn't break through that, and therefore pulled back to the 20. Small bear flag, pullback, another small bear flag. There's actually a little bit of a bearish signal here, and you can see the market starting to downtick. I overall think today will be an up day. I said that from yesterday, folks. I said today's an up day. Even from the open, I said chances are you're going to end positive. Whether or not you're up 200 points or 100 points on the Dow, who knows? But ultimately, it will be a positive day. I continue to believe that. The only thing that would change that in my mentality would be as if something big happened in Japan or in the Middle East or something in this afternoon's trading period, which I do not expect right now. I think things are going to the quieter side. Chances are you're going to end with a positive day. Again, how much up is the question. All right, let's take a look at a couple other keys in this market. The dollar today, major breakdown. And again, I've been calling for this. If you guys watch the Research Center videos, which only those of you that are members can do unless you take the free trial, you'll see that basically every night for the last week, I've been talking about how the dollar, even on this instability, which is usually a flight to safety in the dollar, meaning that when you have issues in the global picture, everyone buys the dollar, or they used to. They haven't this time. Barely any bounce on all the instability in Japan and in the Middle East. Therefore, that tells you that the dollar is weak. As soon as things quiet down, this dollar is going to break down. Sure enough, today, things are a little quieter. Dollar just broke down, and this is a major breakdown, folks. It hasn't confirmed yet, but notice the double bottom right here. You hit it right there. You got a small bounce. We called that bounce perfectly. The retrace back down, again, saying how the dollar would most likely break down, and sure enough, look at this, guys. This is now in uncharted territories to the downside, and again, if we confirm it tomorrow, you're going to go to 2150 on the PowerShares DB US Dollar Index ETF, which again, its symbol is UUP. And again, nice breakdown there. That's very important for those of us that are watching the dollar, or if you're a Forex trader, you have to be recognizing that. And if you're into Forex, the Research Center works too, because you know what? I was saying, watch the dollar. It's going to break lower, and guess what? It's breaking lower. So you can trade other currencies off of that. You can trade the dollar off of it. Forex works. Commodities work because, again, we handle commodities as well. And we'll go to the USO today, which is having a big up day, big bounce today on the USO. Again, it was short-term oversold all the way back in this range, so getting a big pop today. And again, the USO up $1.32. That's the United States Oil Fund. Taking a look at gold and silver. Take a look here, folks. Gold is having a small up day, up 64 cents on the Spider Gold Trust, symbols GLD. And again, starting to make a bear flag. To me, this is a bear flag right now as long as it stays below the 20 moving average. That means ultimately it may have another move down in the next week or so, in my opinion. Probably to the 50 moving average, even possibly to gap fill, which would be at around 132.80 to 90. All right. Next up, we have the SLV, which is this iShares Silver Trust, symbol SLV, also a bear flag. Today, to have the market up this much and not see silver or gold rallying more is very interesting. We've really seen the gold and silver trades go with the market. If the market's down over the last week, we've seen silver and gold down, and if they're up, we've seen silver and gold up. Here today, especially with silver, it's more of a flattish day, just a sideways move. This is also a bear flag. My target ultimately is down to about $31 here. Also, the 50 moving average is right below. I do think you do see a little more downside on silver in the coming weeks or so. Again, at least down to this area of a target, which is right around anywhere between 31 and then ultimately the 50 moving average, which is around 30.50. All right, stay tuned to that because that's an interesting trade right there, folks. The bear flag is very intriguing here. Next up, let's take a look at a couple big stocks today. What do we have moving? Well, Chevron is having a big bounce today. Look at this area of support right there. This is Chevron symbol CVX. Notice the pivot support area right there from this pivot high. That's exactly what it hit, and it's bounced up beautifully, up $2 today. Exxon is also having a powerful day, up $1.35. But notice the differences in the charts. Chevron's a much stronger chart. Exxon's a much weaker chart. Look at this drop here, and then compare it going back to the Chevron chart, and look at the downward move, and it's already moved up. So much different, considering those two stocks are much the same. They've kind of been looked at as sister companies. They do generally the same thing, but the charts are very much different here. Chevron's a much stronger chart right now. Not to say that this is a good long by any stretch on CVX, but I just think that you have to recognize the differences in the two charts right there. All right. Apple Computer hit a master level yesterday. I gave to my Research Center members, and this is for a swing trade, folks. Take a look at this. I added it to the Bullish Pro Trader watch list yesterday, as again, a lot of other things were added there as of yesterday's drop because they hit key levels. Look at this pivot low, look at this, and look at the bounce today. Apple's up about $7.50 right now, and again, that's a beautiful move to the upside. Beautiful move. And again, symbol AAPL on Apple there. Let's take a look at a couple other charts that were looking good or looking decent, and then we'll talk about some weak charts as well. I like Microsoft quite a bit here, folks. Microsoft holding on to this little pivot low. This is a nice area of support right here. It got below yesterday, but gapped back above today, and it's holding on to that line right around 24.90 to 25. We'll keep a close eye on that. In addition, one stock that is very, very weak today is JP Morgan Chase. JP Morgan Chase is actually negative today. To see that negative on such a rally day in the markets is pretty unfortunate for the stock itself. Now, overall, we have to recognize that that's showing relative weakness, and again, now you're starting to look for the major level of support. Where's that support going to be at this point on that chart? And the answer to that is going to be right here, folks. This is where it's headed. If you get to this point, which is a gap fill from December 31st, notice how that's a relatively common theme in these charts. If you get right there, that's going to be a buying opportunity, in my opinion, on JPM, and that's at $42.45. All right, so watch that level. After that level, you'd have the 200 moving average would be next. But right now, again, the weakness here, any sort of weakness in the market, this probably goes down even lower. And again, it's down on a very, very strong update today. All right, Goldman Sachs is only up 20 cents. That's weak. So financials and Wells Fargo is negative, down a quarter as well. WFC is the symbol there. Take a look at Wells Fargo. Also another very weak stock. Financials are not leading today. Today is being led a majority by technology and also by oils and gas plays. Oil and gas with oil up so nicely. Those are getting a nice move today for sure. All right, so that's what we have going on there. One last stock that's weak today in a strong market is Amazon.com. I still think this is where Amazon's going, guys. Ultimately, Amazon's going to come down to this area. There's a little bit of a gap fill right below there. I would say anywhere between 155, 156 area is going to be somewhat of a lucrative level to go long Amazon. Until there, I would probably just stay on the sidelines and watch it, but that'll be your trigger to the upside once it reaches that pivot point. All right, I think that's enough for today, folks. I encourage you to come take the free trial of the Research Center and the Intraday Stock Chat, or whichever one you prefer. And again, check us out. The money that's being made is honestly ridiculous at this point. It's been an unbelievable last couple weeks. The down moves, the volatility, the up moves now. And again, we've been right on the cutting edge of it. Neither bear nor bull, just making money as a trader, as a swing trader. Take care, folks.